future. We're talking real money.
We, me, Don McDonald, him, Tom Cock, are here to do something that few others do on the radio or anywhere else for that matter, and that is making a topic that constantly tries to make itself more complex, more understandable. And that topic is your money, because it's kind of the stuff you need to do anything these days. It's no longer the case that you can just live off the land and, barter with your neighbors. And, I mean, even the Amish can't do it anymore. So what hope do you have? So you need to deal with money, and we want to help you do that. I'm Don. Tom's there. This is our show called Talking Real Money. The phone number is 855-935-TALK, 855-935-8255. And we want to help you deal with your dough daily, or maybe even more. And speaking of making things more complicated all the time, Wall Street and the financial firms out there are always trying to make a product, the perfect product for you and everyone else on the planet. And the latest to do that is a gigantic manager of money. The people, they're a big ETF firm called BlackRock. And they're the iShares? They're the iShares.
I always forget. Yeah, I think they are.
Yeah, I think they are. But they've recently come out with a relatively new product.
Very new.
Called the BlackRock LifePath Paycheck Fund. And it is now available to people in 401k plans.
It has nothing to do with the country music guy, right? Paycheck? Just checking. Wasn't there a guy named Paycheck?
Who's Paycheck?
Anyway, so I could have that
wrong.
Oh,
do you think I know country music? Dude.
You do live in the South. I don't know.
No, it's Florida. Excuse me. That is not
That's
the South.
No,
not the South.
We're going to have this debate now, are we?
Nope. You
Okay.
go. Sometimes you go so far south, you leave the South.
I see.
It's kind of like you go clear around the planet, you're back where you started. So
you're now throwing down with the Cubans or something?
If you go south of Tallahassee or Ocala,
then you're in a whole other
starting
universe.
To get in the north again. Actually, we're more middle north, and when you get to Boca or West Palm, you've gone too far. You're in New Jersey.
The accent really does change at that point.
It does. It totally does. South Florida is Jersey. No, actually, we got some Jersey here. It's really New York.
Yeah,
it's
that
New
I
York.
believe.
It's
So what about it?
Maybe a little Yonkers.
Yeah. What about the LifePath Paycheck funds?
I don't know. I'm asking you about it.
You're asking me. Yeah, I mean, this is fascinating to me because everybody wants one pill, right? That's going to help them lose weight. I guess there's one shot.
Never
be more
die,
attractive. Never get
better,
old. Yeah.
Better sex.
There's that.
There's that.
Yeah, okay.
I mean, honestly, that was the first big pill, wasn't it?
Indeed, it was. Well, I don't know how big it was, but it was a pill. I was happy to report.
I saw you choking those things down that big old... No, I'm kidding.
Don't care.
Okay, this is the family show.
This is fascinating to me because this is what people... at the end of the day is what people want. By the way, number one, when I talk to you, the number one thing they say is, do I have enough money for retirement? That's what I want to know. Mm-hmm. That's what they want to know. And
I want to make sure I have enough income for the rest of my life and I don't run out. I do not want to run out.
I don't want to run out, and I don't want to worry about it.
Right.
That's the other. I don't want to be paying attention to interest rates, stock markets, geopolitical, all this stuff going on, nor Warren Buffett going on and on and on CNBC, which he is today.
He still is?
He's still
while we're live. He's still talking.
He said he's going to outlast those young whippersnappers, Don and Tom, today. So the LifePath
we
Paycheck
just got started.
Is so what they're trying to do here is they're trying to take some of the money that you've saved. Mm-hmm. They're going to put it into an annuity product when you hit 55.
I was going to say, so up until 55, though.
Yep.
It's a kind of like
it's a regular old target date fund. Yep.
And then you hit 55, they take some of the money and they put 30%,
it into 30%
and put it into an annuity.
That's right. And then it stays there until it says from age 59 and a half until age 72, you have the decision. You can either just take the money out or you can leave it in that annuity product and annuitize it.
So it's a fixed annuity at that point until you, at your option, decide to annuitize it. Well, wait.
Lock in a paycheck for life.
That doesn't sound like such a bad idea.
No. Now, what's the trade-off?
Well, that's what I was going to ask you.
We'll talk about that
What
in a
is the
minute.
trade-off? We're going to find out right after we take a quick break. Our phone number, again, is 855-935-TALK, 855-935-8255. Do you have a question about one of your little financial products that somebody's pitching you? Call us. Let's talk about it.
Tom and Don are talking real money.
In medicine, a second opinion might save your life. With investing, a second opinion might save your future. The trick is getting one without a high-pressure sales pitch. Well, I'm Don McDonald, and if you've been listening to Talking Real Money, you know that our goal is to help everyone create a brighter future by investing and managing money better. That's why, in addition to helping everyone on our show and podcast, we are also committed to making our 100% fiduciary advisors at Appella available to help everyone make the best financial decisions based on science. So if you're being pitched a financial product or a system, make sure you get a second opinion with no cost, no obligation, and no annoying sales pitch by going to TalkingRealMoney.com or call 800-386-3004. That's 800-386-3004 or TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
We've forgotten to turn on our mic sometimes, and I just did. We have said for years, for many years, that the number one thing for which you save and invest is retirement. And it's a complicated process, particularly as you move along in age. As you get older, it gets more and more complicated. So BlackRock has come up with a product that is supposed to provide the best of life strategy or target date funds and annuities, the certainty of an income stream from annuities. It sounds really good on the face of it.
It does. And when you read the stuff, you think, check the box. That's easy. I give them the money. They give me my money every month. Life goes on. But, okay.
It does look easy.
Let's just talk about a few of the, shall we say, other parts of all this that you need to pay attention to. Number one, I can't tell, nor can apparently Morningstar, the fees. So they say the fees in the spread of the annuity you can't see. That's from a representative of Morningstar. The opaqueness opens itself up to the chance of litigation, says the multi-asset ratings person at Morningstar. That's one. Number two is, now here's the question that this article does not address from the Wall Street Journal. Is the money yours or is it theirs after you annuitize this? I imagine it's theirs,
it's theirs.
Right? Because
no,
you've given them the money.
Absolutely positive.
Okay.
I am 100% certain of that because that's the only way an annuity, an immediate
Could
annuity,
work.
an income
Right.
annuity like that can work. It's the only way it can work. They can give you a big payment because they're playing the life expectancy game. They're playing the tables that say, yeah, some of you are going to die really early, and we get all your money. That'll help us pay benefits, invest and pay benefits to the people who live longer than we expected.
Which always brings me to number three, which is a risk when you do something like this, that you need the money along the way for something else, for like a house purchase or perhaps a medical issue. I mean, whatever it is comes along, you need cash. Now you don't have the cash that you saved for all those years. So there's trade-offs here. And they're not the first, by the way. Our friends at Dimensional Fund Advisors started the TDIF funds, which I believe is
Target Date
Income Fund. Thank you.
Target Date Income.
Yeah.
But they're
Which
not
is
the
very
same.
similar.
They don't buy an annuity.
No, they don't buy annuities, but they instead use TIPS, Treasury Inflation Protected Securities, for most of the portfolio, a little bit in stocks. The stock exposure goes down. The whole idea here is you get some protection from inflation. But they have been wildly unsuccessful. I'm not talking about the returns. I'm talking about the amount of money you've gone into.
But here's the thing with the annuity product, and that's it's going to be impossible, literally impossible, to ever calculate a true cost, because the annuity, when you annuitize, there is no ongoing cost. The cost is the lost opportunity on the money between what they're paying you. And remember, what they're paying you, part of it is your own money coming back. I've said this over and over again. You look at an immediate annuity. You put $1 million into it. You get an income check. It's over a decade from when you start, and it depends on what the rate is, but it's over a decade from when you start before you start making any money on the thing. It's just your money coming back.
So that's important. Yeah, people. That's the part that people don't understand, or maybe don't care.
That big check they're giving you every month.
Yeah.
If you die it's somewhere between the first 10 and almost 20 years, depending on what their rate is. If you die early, you don't even get back what you put in.
Yeah. And it's
if
theirs.
you live longer, only if you live longer than they expect, do you start making money off of that annuity. They're just kind of giving you your money back, and they're playing the odds. They're playing the actuarial game, which is what insurance has always been about.
So this is
why Warren Buffett's saying it's such a great business.
Yeah, it turns out
somebody
it works
writes
pretty
you
well.
a check, and in return you give them a piece of paper.
And they may or may not ever use that piece of paper with the auto
It's a great
insurance.
business if you figure it out right.
Indeed. So, this gets back to one of the alternatives, right, in terms of retirement income.
Go. What is my alternative as a retiree? How can I not run out of money before I run out of life?
Yeah, and there are those. You could make your own annuity, right? You could set up a portfolio, peel off a certain amount every year, keep the money all yours, not pay somebody else for all that pleasure. You could hire somebody else to do this, right? That generally would be less expensive than this approach. Generally. Not everybody, but generally.
In an indirect manner. See,
thank you.
It's not an apples to apples comparison because there is no fee charged by the immediate annuity. The fee is the amount of money they can make on your money. And if you're someone who's invested for years, you know that if properly invested, the amount of money you can make on your money is substantial.
And I was going to get to that. In other words, the opportunity cost here, right? You're giving up all of that potential, leaving it to others, all these other things that might be or may not be, but for many people, they are important. So that's why I struggle with these products. I'll be curious to see. It says now the number of employees that can have access to these funds is 500,000. I'd be curious to see how many people would elect to do this and then elect to take the annuity at age 72.
Most of those that BlackRock has signed up have made it the default choice.
I saw that. Yeah. So guess what that means?
That is your choice.
You have to raise your hand and say, I don't want that.
Yeah. Now, if they would make having the 401k and funding it the default choice and not optional,
there you go.
I'd be a whole lot happier with whatever product they put you in.
Yeah.
Just make people save for retirement.
So call us in 10 years and ask us how this all turned out.
And that's, before the show, I was thinking about this.
We'll find out then.
I was thinking, this sounds like every new product that we've ever talked about over the last several decades. And what sprang to mind immediately was like, is this one of those better ideas, like ETFs and mutual funds going back?
Or
is this one of those bad ideas like auction rate notes or derivative securities? I mean, which is it? Because you don't know which they're going to be until they've already been for a while.
I'll go with the latter, and I'll tell you why.
Really?
Number one, because annuity, the name annuity has such a bad name now. Most people just put a line through it and say, I'm never going to buy an annuity. I'm telling you, and thanks to Don McDonald's 30-plus years, I guess, work on the radio. That's one. Part two is, frankly, when you start to get complicated like this, a lot of people just say, I just want to keep it simple. I want to know where my money is, what it makes. I don't want to mess with it.
I am just not a big fan. You know me. I am not a big fan of wagering with an insurance company because I know they have more data than I do. They have already calculated what the odds are of their success. And I guarantee you, for them to be a successful business, their odds of success have to wallop mine. It's a lot like the business model of a casino. I don't know always how my odds are of winning, but I do know that my odds of winning have to be below their odds of winning, or they'll go out of business.
Yeah, and we know you don't want to wager with Warren. Yeah,
And
it's
exactly,
a loser,
and Warren
so there you
basically said, this is one of our most valuable businesses ever.
Really?
Geico, because
better than railroads, better than all
utilities.
The rest. Yeah.
I can't even believe they're in utilities.
Big.
I was shocked how much they had in utilities. And what was their largest? What's still their largest holding?
Is it Apple now?
It's Apple.
Okay, yeah, which he never would have bought 20 years ago because he said, I'm never going to buy a large, growthy kind of firm.
Oops.
But he did. Yeah, and got convinced.
855-935-8255. That is our phone number, and one of the things we like best is talking with you. So, if you have a money issue, you want to get a little help, we'll do that. Just you have to call and let us know you want the help.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
855-935-TALK is our phone number here. 855-935-8255. That is just as easy as it can be. The call is absolutely free. And the topics, well, as long as it's money, we're in pretty good shape. Just give us a call. 855-935-8255. Hey, is Warren still talking?
Yeah, I think he is. If you want to tune in real quick and see, I think you just turn that knob up right there.
Index.
Yeah, wait, I think I heard him say index in there. We'll tune in later, see if he's got anything else to add to indexes. So,
how come this is not working? Darn it.
I heard that fine. It was very clear.
You heard it?
I heard Warren very clearly.
Do you hear him now?
No, I don't hear him now.
Okay,
I heard him a moment ago.
It's a thing I'm trying to feed through my computer.
I see.
But it didn't work out.
It's still live on the financial station.
Debbie had Buffett on all day. I could not sit and listen. I said, I can't. I know he's 93, but his voice is very gravelly.
It is very raspy.
It's really raspy. Yeah. But he said something. Who would you say Warren Buffett is one of the premier capitalists in the world?
Sure.
Right. He's made billions and billions of dollars.
Invested in great companies. He's fixed them. Sure.
Yeah.
Sees candy. Yeah. Why not?
He, early on in his speech today at the meeting, and I have the audio here, but I can't get it to play.
Okay.
He said something very interesting. He stated that he is happy every single time Berkshire Hathaway has to write a big check.
To?
The U.S. government.
Oh, the U.S. Treasury.
He goes, I love paying taxes because I have been lucky enough.
So he's lost it is what you're saying. 93, that's it, huh? Okay.
I have been lucky. No, this is actually pretty cool. He said, I have been lucky enough to live and do business in this country, and therefore I find it to be a pleasure to pay taxes. He goes, if they raise the rate back to what it was when I was young in this business, 52% on corporate earnings.
That's what the corporate earnings tax?
He said, I would gladly pay it. He said, I wrote a check last year to the U.S. government, and I think he said it was $5 billion. No,
I'd have to think that through.
I don't remember what the number was. That's the problem. I wish I played the audio. He said he wrote a check to the IRS last year. And he said if 800 companies went ahead and paid their taxes at the same rate that Berkshire Hathaway is paying them without quibbling and trying.
800, not 8,000, not 80,000. It's not very many businesses.
U.S. corporations paid their taxes at the same rate as Berkshire Hathaway. Now, remember, there are, in the United States, publicly traded 7,000, 8,000 companies.
Yeah, they get a little less than that, but okay.
Something like that. 800. If they just paid their taxes at the same rate, I think he said his rate was 21% on their taxable earnings. Those 800 companies would pay enough in taxes that no other tax would have to be paid by anyone in the United States. And
including?
He got a huge round of applause, which caused him to interrupt the rest of the statement, including Social Security taxes.
Wow.
And estate taxes.
You know, I think maybe we should keep the guy around for a while. He makes more sense here at the moment.
93 years old. Again, according to some in business, he's lost his mind.
If he's saying he's in favor of paying a lot,
he said,
large
I'm all in
taxes,
favor of it. And, for the smart Alex in the world like you, who said, well,
Yeah.
if you want to pay more Social Security, you can.
Yeah, they can't stop you.
The point is to get everybody, not, Buffett alone can't take care of the problems. But
I take a big part of it, though.
he did. Well, and he writes a big check.
But he has a lot
It
more.
was interesting. I just thought it was a fascinating, and he got a huge round of applause from his.
In other words, he
audience.
doesn't. What he's saying, really, at the end of the day, is while Berkshire doesn't overpay, they don't game it.
They don't
as
game
much
it.
as many
They
other
don't game it.
as other people
Right.
do. Yeah.
Their
Okay.
goal is not to eliminate taxation; it's to make money. And he said, "I love." And here's what. And we've said this to people over and over again on the show. There is a moral to this story. A lot of you call and go, well, I'm selling my house and I'm making more than the $500,000 exclusion or whatever it might be. How do I keep from paying taxes? Or I'm taking money out of my IRA and I don't. How do I keep from paying taxes? And my thinking constantly is, you made money.
And
Pay taxes.
And here's my end.
You end up with more money than you had before.
Well, but it's a pretty good place. I think that's what he's saying.
That's
It's
what
like
he's saying. But I'm just saying
I'll
you
pay
made
my
money.
taxes. Yeah. Okay.
And
I
it is
concur.
maybe it's not the best place, but darn it, it's a good place. And you got
Pretty
to pay
good.
to live any place. I don't think there's a country on earth that doesn't tax anyone. How would you do anything? 855-935-TALK is our phone number. 855-935-8255.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Hey, everybody. Welcome back to Talking Real Money. I'm Don. Tom's over there. Even though we're on two separate ends of the country, we are going to meet in the middle, though, this summer.
Yeah,
We're gonna
I'm
meet in the
really
middle
excited.
in Madison, Wisconsin.
I know. No,
We're
I'm
meeting in the
thrilled.
middle. So, hey, give us a call. 855.
And okay, finish the thought there. If you want to learn more
I
about
have to
Don's
finish
trip
the
and our
thought?
meeting, I'm going to finish it for you.
All right.
Then you go to talkingrealmoney.com. Right there on the homepage, it says, I think, learn more or something. Click on that. The whole trip is up there. So
Yeah, and then
take
there's
advantage.
a button you can say, hey,
By the
I want
way-
to have a meeting with Tom.
Yeah, that's true. I'll meet with people in Madison. We did a little clearing for you yesterday. My grandsons and I had the machete. They had some sticks, and we cleaned a little. We backed up the brush there for you a little more where you're going to put the silver bullet next to the house. It's kind of growing in.
Yeah, at Tom's RV park and chicken coop
Exactly.
and pizza
Can't
parlor.
wait.
And
Yeah, what else do you want to throw in
The
there?
neighbors are going to love you. All right, let's do a caller, shall we? You want to do
Why
a
not?
caller? Let's do a caller. Hey, Renee, you're up. Welcome to our little get-together.
Hi, I watch your program. I listen to your program every week. Love it. I'm getting ready to retire after teaching for 36 years. And,
Good for you.
Well, I've been saving money, but I've sort of ignored it. So I've got money in Tia Craft, about $800,000, and then the state of Washington allows teachers to contribute to their own retirement fund, and I've got about $850,000 in that account, and then I've got $135,000 in a CD with Fidelity. So now that I'm retiring, I'm thinking I probably need to hire a fiduciary to sort of just have it all and manage it. And I'm wondering what would be a reasonable, startup fee to get started, and then what do you think I should be paying annually?
I thought you called just to brag or something. So
Nicely done.
Waiting for the punchline.
And nicely done on two counts. One, you did 35 years as a teacher, for which I
36.
commend you. 36 because
but who's counting?
I had a daughter who tried it for a couple of years and went, this is the hardest profession ever.
Yeah.
So bless you. And you've got, you're approaching $2 million.
Yeah.
You did very,
and will
very
you be
well.
pension eligible as well or not?
Pardon? Yeah, and so I'm going to be able to live off my Social Security and my pension. This isn't money I think I'm going to need.
Wow. I just want to congratulate you. Before we answer your question, congratulations. Now, here's the reality about fiduciary advisors. The vast majority of fiduciary advisors you will hire will charge you on a portfolio of this size somewhere around 1 to 1.5%, the bulk of them out there. We think, based on what we charge, that for a portfolio of this size, that shouldn't be much more than, on average, about 0.8% a year.
I was going to say 0.75.
0.75, and there shouldn't be anything up front unless it's a plan.
There should be, unless you're just writing a plan and then taking care of everything. But if you're going to have somebody actually manage your money, create the retirement income, help you make decisions around triggering your pension, claiming Social Security, all that, rebalancing, all that stuff, then yes, in aggregate, I think Don's right. A fee of 0.75 to 0.8, somewhere in that area, is reasonable.
It's what most are going to. It's what most of the very reasonable people.
Yes.
Of the best fiduciaries,
Correct.
They're going to be below 1. The normal ones, the middle of the road ones, are going to be 1 to 1.25. The high ones are going to be 1.75 to in some cases even 2%.
Yeah, we've seen that. So you got to be careful. But your thinking is right about a 100% fee only fiduciary.
Yep.
Okay, because I've talked to just one company, and they wanted to charge $5,000 setup fee. And then
I wouldn't hire anybody that charges you a setup fee.
And then how much a year?
Oh, sorry.
Okay. We didn't get into all those details, but it was just to get everything set up and charge $5,000 up front.
I've never run into anybody who did that. I'm sure there are some who do.
You want to tell us the name of the firm?
I can look them up for you if you know them.
If you want to.
Oh, I know them, but I don't want to say.
Okay, no, it's
fair enough.
totally optional.
That's fine. Yep.
Totally. What you might want to do, though, is go to Advisor Info, and that's advisor with an E, ADVISER info.SEC, Securities and Exchange Commission, .gov. Put in the name of the firm. Then go to their Part ADV Part 2A brochure.
2A. Yep.
Download that brochure. It's a PDF file 99% of the time. Look for the fee and expense section. That should tell you what they charge on an annual basis. And do that with some others, too. Vet people.
Thank you.
Go to talkingrealmoney.com/help if you want more information on how to vet advisors. Thanks so much. We appreciate you. And we'll be right back.
Tom and Don are talking real money.
Do you suffer from hodgepodgeitis? I'm Don McDonald, and hodgepodgeitis is a disease of your investment portfolio whose symptoms include lots of stocks, loads of random loaded mutual funds, and maybe an annuity or two. Most who suffer from hodgepodgeitis dread opening their quarterly portfolio statements. They feel lost and confused. Investing seems overwhelming and the financial future uncertain. If you believe you suffer from hodgepodgeitis, see a 100% fiduciary investment advisor immediately. A proper diagnosis is the first step to creating a portfolio with a purpose based on a personal plan. Start on the road to recovery now by scheduling a free meeting with an Appella advisor at TalkingRealMoney.com. There is no cost, obligation, or high-pressure sales pitch. Take the first step at TalkingRealMoney.com or call 800-386-3004. Hodgepodgeitis is not a real disease, but treating it has been shown to improve mood, reduce fear, and even lead to a brighter financial future. Results may vary.
Your guides to a really great financial future. Tom and Don are talking real money.
Our goal is to make you a better money manager, and it is not a complicated goal. You don't have to spend 4, 6, 8 years in school. You don't have to have a PhD in economics to manage your money better. It's a lot simpler than you might think. It's those people who make it more confusing. Although the really, really smart ones, the super PhDs, like the Nobel Prize winners, they just have a way of making it simple.
They always say,
diversify, diversify.
Grass grow, paint dry, that stuff. Yeah.
So if you want to be better at this, call us, 855-935-TALK. And Paul, you're up next. Welcome to our show.
Good to talk to you guys today. I hope you're all having a nice day.
We are, sir. Thank you.
A while back, Tom made a book recommendation, I guess it was about 8 months ago, about a book about Crazy Eddie. And do you remember that?
I do.
Book recommendation?
Yeah. I'm trying to remember the book. I read a lot of books.
It was the book about the appliance guy.
That's right. Yeah. That was the electronics retail guy. Yeah.
In New York, yeah.
I mentioned it to my wife, and I got it for Christmas. And you're talking about a fascinating read, and just how that man ended up on the stock exchange.
I know.
And how they inflated the price, all the corruption. It was one of the most, and that's one of those things I really wish y'all would do some more book recommendations, because that was great. I've got one for y'all that I.
Okay, please.
And by the way, for those of you listening, the name of the book is Retail Gangster, the insane real-life story of Crazy Eddie.
Yeah, and this Crazy Eddie, because that was his on-air persona when he did the
crazy.
ads. I'm trying to remember who wrote it, but
it was written by Gary Weiss.
Yeah, that was a fun read.
That's correct.
Anyway, what do you have for us?
Recommendation. Go ahead.
Whenever I hear of someone like Bernie Madoff or your latest shyster, kind of like the Sam Bankman-Fried, my mind goes back to a name my dad and some of my relatives used to mention in the 70s when I was growing up. It was a name, I don't know if you remember this, called Vesco.
Yes. Wait a minute. I think I read this book.
I don't think I read this one.
It's Robert Lee Vesco. He had all these funds, and they would be like the royalty fund, and it was just this biggest Ponzi scheme. At one point, he got involved with the Nixon administration.
Yeah, I do remember that.
Yeah, remember
you're talking about a fun read for nerds like us that you really enjoy. That's one I'd recommend if y'all get a chance to check it out.
What's the name of the book?
Is it the book Vesco from
the name of the book is Vesco, and it's actually it's got it out here. It's written by Hutchinson.
Yeah, Robert Hutchinson.
Hutchinson is.
It is out of print. You have to buy it used.
I don't mind buying used books because I buy so many doggone books. I kind of feel guilty when I buy all those new ones for $35 because I have to have 800 pages to read about something.
There's a used hardcover on Amazon for $32.
Wow, that's plenty for
we go to estate sales a lot, and I saw it in an estate sale, and I saw the name, I remembered it, and I picked it up for 50 cents. So I felt like it was a good deal.
Well, now you can go to Amazon and you can
turn
it for
around
$30.
And sell it. There's a profit opportunity.
Well, I may have to mail.
That's better than Nvidia. That's better than Tesla. Yeah, that's a good run.
Yeah, it's out of print, but
the only thing about.
Go ahead, Paul.
Can I say something about Warren
Please.
Buffett?
Yeah.
As happy as Warren Buffett is to pay his taxes, why does he usually have 2 or 3 years of taxes in arrears that are in dispute? He's constantly fighting his taxes. If you look, he's always
is federal income taxes from the business.
Yeah, he's always got them that he's going back and trying to get them. You know, he's got them disputed and all, and he's arguing with them, and he says one thing, but he does another thing.
I was not aware of that, but that's interesting point.
I'm not going to get into politics with you because I fear this, but he was accused of tax evasion by a former president of ours. Yeah. And there isn't really anything to back that up. But hey, thanks so much for the call. No. We really truly appreciate it. 855
I'm gonna look that book up.
935 Talk is our phone number.
Crazy Eddie was just fun. That was a fun book. I mean, that was insanity. What the guy did. That was, and build it all the way up, and then as Paul said, get it publicly traded. It was all a scam. I mean, they were making up the numbers about these retail sales, and then the whole thing just blew up literally overnight. The ads went off the air, and that was it.
Yeah, it was a great story. It was a great story. Really interesting stuff. Give us a call, 855-935-TALK, 855-935-8255. Now, we talk from time to time about, speaking of tax evasion or loopholes,
this one's
are
huge.
some strange loopholes in the tax law, and every once in a while we talk about some of them. But the biggest loophole right now, if you want to put money into a Roth IRA in the United States and you make too much money, you can't directly fund a Roth IRA.
Then explain what a Roth IRA is.
A Roth IRA is an IRA where you put the money in without a tax deduction, but it grows forever tax-free. For as long as you keep the money in there, it grows tax-free.
It's a pretty good deal. Yeah.
It is.
So
It's a great
you can,
deal.
but you can't do it if you have a household where you make more than 230, or if, as an individual, make more than $146,000 a year. Cannot do it.
Except you can.
Oh,
Except
that's right.
when
They have
you
this thing
can.
called backdoor Roth IRA, where you take the money, you put it into an individual retirement account, and if you're under the age of 50, you put $7,000 in there. If you're over the age of 50, you put $8,000, and you put it in there, and then you wait one day, and then you get up the next day and you say, you know what? I'm really tired of having money in an IRA. I'd rather have it in a Roth because there it grows tax free. So you move it over to the Roth, and wipe your hands and you get on with your life, and it grows tax free, as Don said, for a very long time. It's kind of crazy.
But as cool as it sounds and as weird as it sounds, because it's like, no, you can't do a Roth IRA unless you do it this way. There is a catch.
There's a lot of catches, actually.
Yeah.
I mean, frankly, when I read this piece, I was surprised at some of them. One of them is that the IRA owner must file IRS Form 8606. Now, I've been doing backdoor Roth for a while.
I don't think I filed that.
I've done that.
No, I bet your account. You use an accountant.
Maybe.
I bet your
somebody
accountant
does my taxes. But do you do backdoor? I don't even know. Do you do backdoor
No, I don't
Roths?
do a backdoor Roth.
Okay, because you got too much in IRAs. Because then if you have an individual retirement account with money already in it.
This is the problem. Here's the big one.
Then you got to do the proration. You've got to take, if you put the $7,000 into, put it in the IRA, take it out and move it to the Roth, then you have to take a prorated amount out of the total you have.
All of them pay taxes on it.
I know.
And
it's messy.
It's messy.
Yeah.
Now, if it's somebody who does not have, this is nice for somebody who's younger, makes a lot of money, and has not set up a regular IRA of any kind. You've just done in the past Roths or your 401k at work. You can do the backdoor Roth and not have a single problem.
Yeah. I actually, at one point, we took all my wife's pre-tax IRA, just moved it over to the Roth, paid the tax, and now everything.
Well, that's just a regular Roth conversion. Yeah.
Yeah. That was Roth conversion. Pay the tax. So, and then you get really confusing if some of your IRA is, pre-tax stuff that you took the deduction, some you didn't take, and you got to prorate. It gets complicated. But in a general sense, and I talked to somebody today where it made total sense for them. High earner, has very little in Roth, and this is a great way to do it. And by the way, you mentioned Roth conversions. Now, if you're born in the year 1960 or later, and your income goes down, you can start converting money from pre-tax to post-tax, move it from traditional to Roth, pay the tax, and it grows tax-free. And you have until have to start taking money out of RMDs at age 75. So you got a lot of years you can move that money over. So there's all kinds of little tricks. What you're pointing out, though, is it's not always as simple as it appears. So pay attention.
If there's a loophole,
I think
there's usually a catch. And by the way, I looked back at as many news stories I could find. In 2005, Warren Buffett did dispute a deduction that was disallowed by the IRS. He went to court, and the IRS allowed the deduction. It was legal.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Again, our phone number is 855-935-TALK, 855-935-8255. And by the way, Warren Buffett has said before that he's going to take every legal, obvious deduction just like all of us do. He's just not trying to manufacture any special sneaky ones.
Which a lot of companies do. I mean, they move money to Ireland, and then you're not going to do that.
And by the way, I just read a couple of pieces that said that that debunked all of the tax avoidance Buffett stories. They were all political. They were not true.
All right, fair enough.
Not true. So. You got to please, everybody. I don't care what you believe, but if somebody tells you something, check it out.
Oh, and Don and I are famous for this because he'll tell me something and I'll say, "Really?" Or I'll tell him something. I'll watch him. Yeah. I'll see him typing.
I'll look it up and go,
"No, quite right.
You're not right. You're wrong."
Because
we are often wrong. We turn opinions into our little pea brains into facts. If we believe it, it must be true. Well, that's not always the case. There are a lot of things I believed years ago that are not true. Like about investing. I believed many, many, many years ago that you could out-research the market. You could outthink it. And now,
or you could find somebody else who could.
Or you could find somebody who was smarter than the market, like a Peter Lynch. Now I truly believe you cannot. You can't game it. It's impossible. It's too big.
There's too much competition. Too is the right word. Too much, basically everything for you to do better than market averages.
Not little old us's. Now, if you're a multi-billionaire and you run a hedge fund and you're really, really good at exploiting loopholes and taking advantage of people and maybe walking right along, skirting the edge of the law.
Did you say hedge fund?
I did say hedge fund.
Yeah, because, speaking of Warren Buffett, he had that bet with the hedge funds, and they lost to the S&P 500.
I know.
You can say what you like there, but
Warren Buffett said the S&P 500 over 10 years will beat an index of hedge funds. And the hedge fund guy, was it Paulson? Who was it?
I forget. No, he had more than one, I think.
I don't know, but he said
measuring it against.
No, it was a hedge fund index. Yeah, the hedge fund index.
Yeah. Mm-hmm.
And the S&P 500 over that 10 years beat the 2 and 20 hedge funds.
Yeah.
Pretty remarkable.
Believe what you like, but the numbers were the numbers there. So.
We're just regular folk, though. We are so regular.
We're not in hedge funds.
We are so regular that one of us is driving across the country in a 1989 Airstream trailer, and along the way hopes to meet a few of you. I already know one stop is at a dairy farm. Debbie and I are going to hang out at a dairy farm one day.
I understand it could be a moving experience.
Stop it! You did this already.
Oh, okay. All right.
I'm. If you keep this up,
I'm trying to kowtow to you. That's
all.
I'm
going to have a cow. Okay. Anyway, jeez, he's annoying. Anyway, I am stopping in Madison, Wisconsin. It's on the way.
I'm simply trying to milk this for every dime we can get out of it.
So
okay, let's make it simple.
Stop it. We only have 1 minute left to get this in. Tom said, we have a lot of listeners. I get a lot of questions. People want to meet with me from Wisconsin.
Yep.
Where is Madison? I told him where it was. He goes, well, that's pretty central. It's between Milwaukee and Eau Claire, and, it's in there. Or not Eau Claire, La Crosse. Anyway, and Eau Claire. So he's going to fly out while I'm there.
Come to
I'm
Madison.
staying at a park at Lunny Farm, and Tom is going to fly out and get in office on Friday, the 19th of July, to meet with you.
Yeah, but you got to get in. You got to sign up. There's going to be a limited number of those meetings. So
you
go to talkingrealmoney.com and
just click on the trip. You'll see a trip button or meet an advisor or whichever. It doesn't. Just get in touch with us. We'll make it happen. And if you want to know more about the trip and where I'm stopping up until the Mississippi River, just go to talkingrealmoney.com. You'll see a picture of my polished trailer right there. Click the button.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit talkingrealmoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.